Hi, everyone. We were just having a very fascinating conversation, and then we looked up and it's 9 a.m. Mountain Time, 11 a.m. Eastern Time. So happy to welcome you to our show. I know if you don't know Karl, you've gotten to know him a lot better over the last week. I was on his show yesterday. He was on my show the day before that. And I just love having a consistent flow that really gets people to know someone in a shorter period of time with more information. So naturally, because Karl's into creating funding opportunities and supporting funding opportunities, that's what we're about. But we talked a little bit earlier that we want to make this program easy and accessible to anybody who has a question or curiosity, so you don't have to be on the threshold of raising money, but it's good to get to know what you might need to do and who you might need to do it with in advance to give you some context. So, Karl, welcome to the show again. Chat's wide open. We invite everybody to share any thoughts, questions, or challenges they may have to give us a shot at it. And with that said, I'll turn it over to Karl, and Karl can take it from here.
Well, good morning, Don. Thank you for having me on your show this week and again this week. I appreciate the opportunity and always love to talk about the challenges of raising funding. Most of my focus is on small businesses, startups, and companies that are scaling up, leveling up, and trying to deal with all the intricacies, all the complexities around that, which start all the way at the beginning of how much money do you need. But then at some point along the way, you have to communicate that to people who may be potential investors in your business. And that becomes its own challenge. How do you tell the story accurately? How do you get the information across that the person needs to hear, needs to see, both in order to make a proper investment decision to conform to securities regulations that govern how and where and when this communication may take place. And yet, not every small business is the prettiest picture that you would ever want to see. So telling the true story, being fully transparent, is obviously going to scare some people away. They're going to say that's not the business for me, or I don't like where they're at, or any number of things. So businesses do the dance of trying to tell as much as they need to without telling a negative story or spinning the story badly. And it's a hard point to get into because done incorrectly, it will create future problems. It impairs the relationship with the investor from day one, where you get off to a bad start. And if the relationship goes badly, it may prove to be a cause for civil or even criminal action against the business somewhere down the road. But most of the time, it's more a matter of just understanding what is it that you need to tell, what is it that represents full disclosure, what will give that investor the ability to do what they call due diligence review on the business. And these are all things that are common to any transaction in which a business is going to engage, any relationship it's going to form. And the business, the leaders of the business simply have to remember always who you're talking to, respect them, what do they need to know, what's fair in exchange of information, so that you're not putting the other person in a bad place by not disclosing everything or spinning the story a little too tightly for what's really going on.
Yeah, I can see how that could be an issue, especially trying to be an honest broker in the transaction. And with that said, it compromises the person in the middle who knows more than's being disclosed. And I believe two things. First of all, sometimes it's not what you disclose, but how you disclose it, right? So if you just leave something on someone's doorstep and run away, they don't have a lot to work with, right? But if you actually disclose something and create a lot more context, a lot more background, So, I know in financing there is no absolutes. Everything is a matter of degree. Not everything's 100% risk. Anything is 100% no risk. But I think it's the understanding of the risk and what people share relative to it. Like we've taken measures to minimize this risk, bought insurance, or got something verified. And I do believe sometimes, and it's probably a natural tendency, is some people are so in need of the money that they'll get the money today, worry about the risk tomorrow, because if they don't get it, then maybe it just disappears, or their time frame is short and getting shorter all the time. Again, depending on the position of the business, if they're burning through cash relative to having resources. But if we take it to one more level that everybody can apply, how are people disclosing things about themselves, about their business, even though they may not be going for financing? Because, most people have pretty long memories when it comes to important points, right? So if somebody said, I got a PhD from Harvard, somebody said, well, that's great. So happy for you. But if you find out they never finished school, then you wonder how, naturally you tend to say, if it happened here, how does it apply how it happens other places, right? So if
Yeah.
someone can't keep their
Yeah.
story straight, go ahead, Carl.
No, the point you're making is that the funding in particular, but any business relationship is based on trust. You're trusting the other person to do what they said they were going to do. And whether it's going to deliver a product that you purchased, or it's going to perform on an investment agreement of some kind. And so when you're starting and forming this relationship with from the very first impression that you make, your credibility is on the line. The person observing you is going to ask the question, can I trust this person I'm talking to do whatever it is we're going to do? And there are a lot of people out there who are nothing but liars, cheats, and so forth. And they're, even though they make up such a small percentage of the total population, they wreak havoc wherever they go. And you find that you have to kind of put on your radar every time you talk to someone, is this person a person I can work with? And I do that by asking questions where I'm able to say, well, I can verify that fact. I may not be able to know this, that, or the other, but I'm going through a kind of a mental checklist to say, is this person real? And I encounter people all the time who they're great salespeople. They'll tell you anything you want to hear. One of my worst learning experiences was a friend of mine who would tell me what he thought I wanted to hear, whether it was true or not. It's kind of like talking to Chat GPT. I was getting hallucinatory answers, which were not based in reality. And quite often problems followed because what I wanted to hear was the truth, but what I got was something else. And so I didn't prepare for a problem that I could have maybe avoided or mitigated if I'd known it was a reality. But it hit me by surprise, and then we got out of it. But there's all kinds of bad people out there. One of the things that occurs in raising funding is what's called a bad actor check. This is a background check on an individual to see if they've engaged in past actions that may have got them crosswise with the law, may have got them in jail, may have got them prohibited from raising money. And this is commonly done by a third party, like you do an employee check or any other type of check. It just goes deeper and into selected databases where you're more likely to reveal if a person has that kind of a problem. And this is getting serious, and some people do it all the time. Some people bad actor check everybody. Some do it only when they're required by the law to do so. They trust their own judgment more so than they do the background. Um, And it's an interesting thing, but I've found that um, a person who lies a lot also doesn't check the backgrounds of the people they work with, because it's kind of like they're afraid they'll reveal themselves. And so you'll find situations where everybody in the room is lying to everybody. And your best choice at that time is to get up and walk out the door, because there's nothing going to happen in that meeting that you can rely upon.
Yeah, I guess it also affects the lender too, in that if they don't disclose enough or they commit to more than they can do, and that was the basis of someone deciding to go forward, there's liability on their side, and usually the investor has the funds. The challenge is what can you recover, right?
The,
So
the,
go ahead.
the investor candidate may tell you they have the funds, but it's a common phenomenon for whatever reason for a lot of people to walk around like they're flush with money when they have no money at all, or they've expended it all. And it's really hard to understand why they would waste everybody's time telling them, telling a business that are an investor candidate when they have no capacity to make an investment. But it's out there. So it's one of the things that I recommend at the first meeting when you're talking to an investor candidate, is ask them point blank, you know, if you want to make the investment, can you make it today? Is there anything standing between you and writing a check if you decide you want to go with this particular deal? Because it does the business no good to have 3, 4, 5, 10 follow-on meetings where the guy continues to kick the tires, as Harvey likes to call it in his show on franchising, and they're not going to take any action. It's wasting everybody's time and energy. And yet that's a very common challenge for a small business, is having people tell you attaboy, pat you on the back, walk all around it, ask for demonstrations, and just suck up your time, and nothing comes out of it.
Well, it looks like something like this would be beneficial to get preparation in advance of doing it. So, in other words, one could stage their fundraising based on checking the right boxes, right? So, is everything clean? Is everything whatever? Because you're in a compromising position, because the reason people will source you is because of your relationships or access to people they can't or don't have the same relationship with. And those people trust you, right? So you're one level of, let's say, validation that, hey, Karl brought Jim to me. I don't know much about Jim, seems like a nice guy, but I just met him. But if Karl says I checked him out, or hey, I've done some research, that'll be a feather in the, let's say, person who's looking to raise capital's hat. And everything we're talking about is a matter of time efficiency, right? So if you're not ready, going ahead ruins your chance of going later, because you only have one opportunity typically. The other thing is, I believe people don't understand what investors are truly looking for, because investors are not, if they're sophisticated, are not naive. They know everything has a risk. Everybody has a blemish, right? So and if they're going to see it, why not be out in front? And I think that's what investors appreciate, is not only is this a prerequisite to do a financing, but are we going to run around the block together all the time chasing each other? Or when something happens, will I get the information as fast as it's known and allow me to participate? Because I think the other thing about not disclosing is you limit the support you could get from the people who might be able to give it to you. And if someone says, hey, the roof fell in, production was closed for 4 or 5 days, we're going to miss our numbers. Well, someone could say, well, how many times is a roof going to fall in? And that's an act of God or nature, and I can accept that. But I know by doing turnarounds and restructurings, and especially dealing with creditor committees, if you knew something and they know you knew something, didn't say it, it's all over. Because they're put in a position. I've had so many credit managers say, hey, listen, whatever you tell me, I'm telling the person I report to. And if it doesn't happen, I can't help you anymore. So if you say the check's in the mail and how much it is, I'm going to send that up. That doesn't happen. We're done. Right. And I think when people know there's consequences and people aren't dumb. And another thing, a lot of people have pride and don't want to be taken advantage of. I mean, investors know some things just naturally aren't going to work out for whatever reason. You never know exactly why or who. But you also want to have a relationship that if it doesn't work out, well, everybody had the best intent. Everybody was dealing with full disclosure. Everybody had access and opportunity to make an adjustment. And adjustments will have to be made depending on the term of the investment, how significant it is. I guess that lends itself to not always being the 100% lender, depending on the situation. So if you can aggregate it or bring people in and syndicate it, right, to say, okay, I'll take a 20% interest as opposed to the whole 100, but I guess that's conditional. It really does take a person of awareness and a person who can communicate very clearly and how they prioritize what's important to the investor. Clear communication must benefit you, but also, I guess, prioritizing what you say is necessary. If you can't do this, you can't do this, and we can't do this. What's your thoughts, Carl?
Well, number of points that are important to bring up at this time. Investors come in all shapes, sizes, and flavors, and particularly means degrees of experience in making investments in different types of investments of different complexities, different levels of risk. And so if you're a small business, you should be doing due diligence on all your investor candidates, and you should be ready, willing, and able to tell an investor candidate, I'm sorry, but I don't think this fits your needs as far as investment goes. Because if that person puts the money in, say, with the expectation they're going to get it out in a year or two, and this becomes an ongoing long-term type investment, the investor's mad because this isn't meeting their expectations, what they wanted to do with their money, and they're going to bring that anger back to the small business and visit it on the small business repeatedly, while they're saying, when do I get out? When do I get out? And it becomes a factor both in the operation and the relationship going forward. There are other people who simply can't understand a 10-layer capital stack, and they shouldn't be investing in things where they need to understand the interdependence of that. This capital will only come in if this other type of capital comes in, and it may not come in. And so you've got to set the table for that. So the one, you want to really know your investor candidate if you're the small business, in the same way that the investor candidate wants to understand and trust the small business. So for that reason, there are a lot of times that other people get involved in this transaction. And I myself am not a broker. A broker stands between the small business and the investor. They're in between, and the broker is advising one side or the other. So you may have what is called a registered investment advisor who's advising the investor. You may have a broker who's earning a commission advising the business. Both of these are standing in the middle, and both of them are vulnerable if this thing blows up in the future. So they will both do their own review, their own level of question. Not only can I represent this group, but can I make money doing it? And a lot of problems that we face today with small businesses is that it's gotten so complex, so expensive, that these two groups don't participate. They say, there's no money in it for me. I can't make a profit out of providing a service. And then you get into a bunch of gray area stuff where you have people holding themselves out as finders who are doing introductions, but they're taking a commission for making an introduction. And the rules get very tight in here because anyone who's standing in the middle is influencing whether this transaction will ever occur. They're somehow putting their own reputation on the line by being in the middle. And that also means that people in reliance upon that reputation may bring them into later litigation or a dispute if it's going to arise. So, and every time you bring in a person to the middle and they do their own work, we just add more cost and time and everything to this stuff. So a lot of people try to skip over that. So that's why we have bad actor checks. That's why we have financials reviewed or audited by accountants and CPAs to again verify, validate information. And this actually helps speed the process. So instead of, because their name is now on the line, they are now the one who supplied this information or looked at it and said, this is okay. And I've seen accountants look at 5 years of losses for a small business and they go, yep, these are accurate representation of what the business has not achieved. And that's good. That's the full transparency thing that we're talking about. But anytime that you see anyone talking about an investment, you kind of have to ask yourself, what's in it for them? Are they telling me this because it's a pure objective opinion? Is it because they're trying to help somebody else rather than you? Are they making money off of the transaction? And some transactions get so convoluted that you don't know that anybody is one understanding what's going on, or anybody can be trusted to give you a purely objective opinion of what's going on. And then at that point, you either have to step back, step away, or go find someone who you hire and say, your sole job is to give me an unbiased opinion on what's going on here. And again, this contributes to time and cost. And on the small dollar size, small businesses can't afford this. They can't get involved in it. They try to do their own thing. And there's nothing illegal about it or improper about it, but quite often the small business doesn't know how to do what they need to do. They may know one way of doing it when they should do it a different way, and all these other issues come into play.
Well, what comes to mind is understanding the business oneself and then looking at how do you bring strategic investors in. And because with people or companies you're already doing business with, there's a history, and there's a self benefit beyond the investment. I know like UPS is always looking to invest in their best clients. And they may invest because they've got technology allowances. Based on how exclusive your relationship is, there's benefits to that because they're looking for market share. They're looking to compete against FedEx. So there's feathers in their hat that you can support that wouldn't be applicable to somebody who just writes a check, because their only interest at that point is getting a return and making sure their investment's safe. Where if you then look at it, vendors are a great source of financing, right? So if you're moving $1 million worth of someone's product and they decide, hey, we'll give you 90 days to pay for it, you've got $300,000 worth of open credit based on, 3 months of that, of interest free, no obligation, and a lot of times unsecured. And then
I so totally agree. I'm such a huge advocate for strategic investing. And the example that you used, a lot of businesses don't understand that that's a form of investment. I use a very, very broad term, but if I needed to buy component parts from a vendor and I had to go to an angel investor to raise the money and give up more money and part of my profits in the future, then the cost of buying that inventory is going up as I'm paying for it. Where if I go directly to the supplier, the vendor, and they say, yeah, we'll give you 90 days. And I go, well, it's It's taken me about 100 days to get it, install it, package it, sell it, and get my money back. Can you give me 120 days? And the vendor is going like, yeah, it's only another 30 days to me, but you now have time to create your final product, sell it, return money to you to pay off the vendor. And it's a form of investment. And it may be one of the cheapest sources of funding that you can find is simply an extension of your credit line or your time to pay back a particular supplier or vendor. And from your standpoint, you avoided the whole mess, the challenge of going out to someone you don't know, asking them for money, convincing them that you're the right choice out of all the other people that are competing for the money, paying the higher price for the money, and to come back just to get a line of credit extension that might cost you nothing, as you said, might be not collateralized, may not have to tie up any of your assets, all these positive things. And your vendor already knows you. They already know your business. They understand your market. They're part of your supply chain. So your time to educate them on who you are is this long instead of an investor who's never met you before, which could be forever. So these are things that businesses in forming relationships with investors, or a classical common form, or in a form where uh, it's a line of credit, it's an extension of time to pay. All these things should be examined when you form the relationship. When you talk to the guy for the first time, you go, okay, when do you need payment? Do you need it up front or this time frame? You look at your sales cycle. You say, how much time would it take me to turn over what I'm buying, or to complete the sale, collect the money, and do all these things, which are all money management. And but they basically reduce the need for you to go talk to people you don't know and try to convince them that you're the best choice for their investment dollars.
Well, and if you're very efficient in how you leverage what you already have in place, your need gets diminished, right? So if you said I need a $500,000, but I can find $250,000 from my vendors or suppliers or whoever, now you only need half as much, which means now you only have to pay half as much. You may not have to secure as much. You might not have to sign personally. And the other element is if you can fund your business internally, you don't have to deal with attorneys, accountants, uh, road shows, presentations, which takes up a lot of time and attention from a small business person, right? So if you're focused on this instead of running your business or drilling down and deciding what do we actually have to have in this period of time. And because if you have to go back and get another round, unless it's an up round, it's usually pretty challenging.
It
And you've
is.
also got a bad taste in their mouth is that, hey, we started here. Here was your numbers. Here's your performance. Here's your story. I'm not excited, right? And go ahead.
Let's go back to the point you made about, well, if you can get half the money over here. This is something that is an exercise a business should go through, because quite commonly somebody will come to me and says, I need to raise so much money. And an example, a guy was manufacturing a golf product. And he said, I need $100,000. I said, okay, I want your use of proceeds. How are you going to spend that $100,000? Well, he broke it all down, and some were for people, some for component parts, some was for a patent attorney, and so forth. And so I said, well, let's go through the list. I said, can you get this from over here in a trade or a swap or something? We worked the list, and when we got done, we got down to only needing 15,000 of the $100,000, which had to go to the patent attorney because he had some stuff he had to do and file and cost associated. But not only did he reduce the dollar amount that that business was looking for, but because they had lined up the other $85,000 from all these other people, technically they had created a capital stack or an investment package where all the other people said, we trust this person enough to do this, that, or the other with them. And so when you do go out to raise the $15,000 from maybe a wealthy individual or borrow it from the bank, you walk in and go, I'm not asking for 15. I already raised 85. You're just backfilling the last $15,000 of this total capital package I put together. And look how creative, how, I've worked with this to solve this particular challenge of mine. And it's totally impressive to anyone who sees something like that. And again, this is one of the positive transparencies when people go, well, what do you mean you need 250,000? Well, I already got this money over here. I got this guy to come in and work for me at a discount. I got all this. I've already raised $2 million. It's just not in money. And some people go, well, that doesn't count. And you just discard those people because they're too narrow-minded. That you've already demonstrated your ability to raise funding, and all these things come together to create part of the credibility. Are you somebody who just thinks they're going to solve every problem by asking somebody else for money, which is not a good demonstration of a person's ability to run a business? Or is this a person who's being very frugal, very thoughtful? Are they getting most efficient use of these other resources? So if they do need to go out for cash, they've minimized it. And it conveys a really great story. And it makes that person a kind of person that everybody feels comfortable giving money to because they feel good about it.
Well, what it brings to mind is how quality of an operator or manager or leader is someone, because there's so many strategic opportunities, because even a bank has an interest in a good client, right? Because there's merchant processing. So in other words, they can add up where is income coming from. And if there's enough income, there's a reason to invest in that because they're going to get paid back through the relationship, through maybe a lending facility, a line of credit or something. And the other thing I know is that when you go for financing, people are going to be looking for a list of payables. They're going to be looking for a list of receivables. How aged are they, right? How many accounts are up to date? How many are 90 days behind? What's the chance of recovery? And then, investors can talk to your vendors, right? So all those vendors and service providers can be a natural strategic source. They're also a great reference that if someone says, I want to talk to Mr. Crowley at ABC Company, and he says, well, I've been doing business with Karl for 10 years. He's a straight shooter. He does what he says. That's going to reinforce that. And if you're the biggest supplier or the biggest customer, what's the chances of this continuing? Because I guess the downside is if one customer is 65% of your business and they decide that they don't want you or need you, and a lot of big companies do that to small companies. One of the traps that, Amazon or Walmart put people in is they can take someone's production and just go through the roof, and now everybody's building capacity, everybody's building for future, and then all of a sudden the bottom falls out and you're upside down and you're not in the best of shape. So I think that minimizing risk from a company standpoint, from an investor standpoint, and also showing how you can work with and through people, that you don't have to use everybody as a backstop. Like, I couldn't do this, so I need more money. Well, did you try to do that? Did you try to come up with, did you do anything is the bigger question. And if not, why me? Why am I always the guy who has to come to the rescue? And I think that's where an investor a borrower has to be very articulate, has to be very considerate, and has to ask the right questions. Because so many people assume their issue is somebody else's issue when, hey, I don't even care about that. If you think it's a big deal, here's what I do care about. And here's what I'm not happy about. And a lot of people sign a check and walk away and wait for numbers to come in.
Yeah, it's odd to me how many times a small business has an expectation that people have to give them money. whether they go to a bank, they go to a wealthy individual or something else. It's like, I'm doing my job. I need money, so you should give me money. And there is often a failure to demonstrate any level of respect for that money. And you've heard the term OPM, or other people's money, which is unfortunately a slang term among some entrepreneurs, where they don't care about what the money is, because it's not their money. They're not on the line. They're not at risk. And if you're an investor and you see this level of disrespect for your money, they come to you and basically throw stuff at you and say, when can I pick up my check? Without answering your questions or giving you the necessary information to assess the risk of the opportunity, these people are going to very easily go, I can find somebody else to give my money to, somebody who will show respect, who will, and there's a correlation. If they don't respect your money, they're probably not spending it in the most efficient fashion. Those go one to one. But it happens all the time. It seems as though that we've created this myth that all entrepreneurs are entitled to all money that they ever ask for. All I got to do is stand up, raise their hand, and go, I need so many dollars, and wait for the money to show up. There is no relationship between them and the investor. I refer to it treating the investor as an ATM, where they just go in and slide a card in and out, and money spills out of it, and they come back again as often as they need to. It doesn't work that way. And in a particular volatile, chaotic market like we're in now, somebody who might have been willing to invest in you a month ago may have had to change their mind. The situation, conditions may have changed enough that they can't make that investment anymore. And even though they may want to chase good money after bad because they already gave you some money, they may be unable or prohibited from giving you any more funding. So the relationship becomes critically important. You want people who understand what you're doing well enough that they may also say, are you sure that you're okay? They're looking out for you. They may say, do you need to, do this, that, or the other, or can I help you arrange third-party financing, something to help you help them, because they're doing it in their own self-interest. But the fact that they're willing to help you along the way is due to the relationship. It's not because they've got nothing better to do.
Yeah, yeah. It just reminds me of some of my experiences. And everybody's criteria is somewhat different based on their position and situation. So if you're just dealing with a well-heeled individual, you just have to satisfy that individual's needs, right? Because they don't have to report to anybody, they can write a check. And in a lot of cases, they just want to learn from you, right? And if they can apply what they learned to something bigger that they have, now there's a benefit to it. I know in the past, there's been elements of acqui-hiring, right? Where you acquire a business just for the key people, and whatever happens to the business doesn't really matter. Sometimes you'll take a business out because it's a direct competitor, right? And it's easier to just take care of it as opposed to compete with it and lose more margin than you might have to. So again, it's the conversation, it's the understanding, it's the get beyond how much you need, what do you want to do with it, because that's just you and you. What you really have to do is put the other party first. And if you show you're sophisticated enough to say, when it's right, it's right. If it's not, I don't want to do it. So in other words, there's a point where I'm not going there either. And you don't want investors that are on edge from the beginning, right? That just barely made the investment reluctantly. And some people feel, and I know it's not aligned, that if someone puts so much in, they have no choice but to put more in, right? Because they're so deep that and that's really wrong, because there's a lot of pride out there. There's a lot of ego out there that someone says, you fooled me once, it's not going to happen again. I think that's just the ability not to look at investors as kind of suckers, you know?
Well, yeah, go even further. Don't think of them as an investor. Think of them as a person who is a candidate to be a lifelong friend or relationship, because that could be the case, whether you want it to or not. And so if you're saying, hey, yo, I'm just going to borrow money from this bank because I need to get over this hurdle and I'll pay it back in 90 days, and then 90 days comes and goes and you can't pay it back, bank's unhappy, you're unhappy, and you may not find any more money from that particular source. But if the bank is, I'll call it abusive, or they treat you like an ATM in return, do you want a relationship with that particular institution or that particular person? And so if you start this whole thing with, well, yeah, I do need some funding, but I want to form a relationship with someone I would love to hang out with. I want to go out, maybe hit a round of golf. I want to do burgers together on the grill. Somebody that I could invite over to see my family. And you use that as a metric for who you're going to do business with, where you say, I could do this today, I could do this 20 years down the road. That may be a better guideline for determining who you want as an investor than how deep their pocketbook is.
Yeah, I mean, I think that makes perfect sense. And, there is so much nuance, finesse to what we're talking about, and, is this somebody you want to take a long ride with in the same car? And a lot of times the money isn't as important as what comes with the money. So, I've seen situations where the biggest price wasn't the one that won the deal, right? It was like, well, they're pretty sophisticated in real estate. And if I'm going to expand and need locations, maybe they could be that intermediary that can help me. Or, hey, I'm in the marketing. They got two really smart marketing people that they're willing to kind of offer me in support of situations. And I guess the person in the middle needs to quantify and qualify that. I was watching a short on Mark Cuban, and and I know Shark Tank isn't reality in most cases, but they said to him, "What was the biggest loss you ever took?" And he said, "Well, I invested $1 million in this company and this person." And they said, "Well, how did it work out?" He said, "Well, as soon as the guy got the money, I see him in Bora Bora doing TikTok or Instagram. Then I see him in, Las Vegas doing a video." And I called the guy up. I said, "Well, aren't you ever going to go to the office and go to work?" No, he says, "Well, I'm just going to influence and get all these people." And naturally it bombed. And they asked Mark, "Well, what did you do?" He says, "There's nothing you can do. These people are never going to change. I mean, I'm not going to chase somebody and, wasn't right. But then they have to figure where they want to invest their time and interest. Is it in the past and things you can't undo?" But there is a lot of liability. There's a lot of jeopardy, because not only a liability is, can you be responsible for something, but you could have made something work, so if you did it the right way and with the right people. And sometimes it's not a bad idea to say, "You're right, I'm only 75% there. Let me come back with the other 25 for you." Right? And at that point, it's like, if that's the case, but again, everything's different. A lot of times people may see something you're doing in your company that you don't and can add that value back. Someone who's good with numbers can see how you're using your cash and how you're not. And I think, instead of trying to shortcut it or minimize exposure, it's better again to understand, what is the exposure? Why is it necessary for this? And easy is not always the best approach, right? Just because the game continues. If you're selling a business, that's a different transaction, right? Because, once you turn it over, you get your money, they get the business. And unless you're on some sort of contract, for a short period of time to help the transition, it's a done deal. Now, naturally, full disclosure is even more important. I actually saw a case the other day where someone sold their company, I think it was to American Express or some big company, for 8 billion euros, which was 11 billion. And within a year, they wrote the whole thing off because it was all fabricated. I mean, it's been 15 years. They had to bring somebody over, extradite them, took forever to go to trial. Uh, but, it was so blatant. It was so obvious that the numbers weren't there, the assets weren't there, that you wonder what is going through these people's minds that
Yeah.
what
You see things that are too good to be true. There are scams that are run regularly against businesses as well as individuals, where they're talking about some fantastical rate of return, some basically open-ended money pot. It reminds me of the first time I encountered a chain letter, where a friend of mine says, "Hey, put $10 in the envelope, mail it to this following address, and you'll be then pass this letter on to 10 people, and they'll pass it each on to 10 people, and you create a multiplier effect." And I always have been particularly good with numbers. And I stopped him. I said, "Where are you in the sequence of getting this letter out to the population?" And he says, "Why is that important?" I says, "Because anything after position 67 exceeds the world's total population at that time. Everybody in your downline would have to send out 10 letters to everybody else in order for you to get your money back. And that won't happen because the world's already been tagged. Everybody in the world's already received a letter before your letter will arrive where it needs to arrive." And he stopped and he had to think about it for a while. But this is the kind of thing where you're saying that why would you believe that somebody would just give you something for nothing? And yet most scams are disproportionate. So well, give us a little money and we'll give you back 100 times your money. But where's that going to come from? They'll talk about investing in these trading platforms that pay 20% a day or some ridiculous number. And I go, nobody in the world pays 20% a day. And why would you be selected out of all the people in the world to get to participate in this particular platform? So you've got to take a reality check always and often to get there. But when you're talking to investor candidates, I think too often we accept the lowest common denominator or the least valuable investor whose only capability is writing a check. Whereas if we tried to create a profile of the best possible investor candidate, it would be somebody who can open doors, who can invest, who can advise, who will introduce you to people, may even be a purchaser of your product or reseller, a supplier, somebody that's in your supply chain, who's a celebrity status in their own right. They can tell everybody and everybody listens to them. And so what too often as we start off is go thinking only about the money. I'm going to get just enough people to write me checks so I can get out of whatever jam I'm in, instead of asking the question of who can help me best. And if I want a particular long-term relationship, what would that be? Who would that person be that I should be looking out for? Why am I not targeting and asking that person to be an investor instead of my neighbor or my cousin or somebody else, for money, who's clearly in a less situation to provide the money and isn't going to be able to add all these extra bonuses or extra ingredients to the stack. So more thoughtful approach to raising funding all the time is start with relationships in mind, start with an exchange of values. What are you doing for them? That's your contribution to the relationship. What can they do for you? And the fact that you need money is only one element because you're going to go spend that money on a bunch of other things anyway. Why would you raise money over here if this person could have opened the door to a customer and skipped through half of these steps? Um, So we get into a lot of short-term thinking as entrepreneurs, partly because we're short of capital and we don't feel like we have a lot of options. But better planning, better strategy, better relationships will reduce that problem a lot.
Yeah, and I think people need to appreciate or understand that rejection isn't a bad thing. It's a guiding. I mean, when someone says, you didn't make it, and like I say, when I first started my first business, it took me 5 banks to borrow on my car, right? And it wasn't that risky of an investment because it wasn't that expensive of a car, and they had something tangible, right? So if they had to, they would minimize their risk, but they would also have a banking relationship, and they can justify that. And at a certain point, they're home free. But through those 4 rejections before raising that car loan, I got someone to tell me where I was missing. And I found people to say, here's what you don't need to put in, right? And after a while, through 4 rejections, I got it right. So it wasn't raising money to borrow a car. It was understanding what people look at, what's important, what isn't, and being able to say, okay, I can't go back to this banker again, or I really don't want to, but there's plenty of bankers. And the main thing is getting it right. The other thing is, how much can you do for yourself? If you have money, but you don't want to touch it, right? If you got stocks, you don't want to cash them in. It's like, well, if you looked at somebody who you don't know as somebody you really know and trust, let's say it was an uncle that could afford it. Would you put your uncle in that situation? Would you lie to him? Would you not disclose stuff? And if you think of that uncle, there's probably a bias towards you, maybe a soft spot in their heart that will allow them to do something that traditionally they wouldn't do for a stranger. You got to look at the stranger and say, why? They don't know me. They have no interest in me. Why would they do anything more than what's good for them to start out with? And maybe once you start, you can start building relationships, understanding, because it is trust. I had a partner who was the best partner you could ever have for 12 years. And I always relate to him. And it was, we signed a ton of agreements, documentation. We just sat there and just gone over it. And just as an aside, I didn't say a boo. And all of a sudden, something came up, and for some reason, it triggered something in me, and it was a piggyback clause. And I just said, well, if Fred's going to get it, I should get it. And everything just stopped. And Ira, who was the attorney there, and Fred was there, and they just both looked at me. And I think it was just a surprise to them. And Fred said, hey, Don, I'll tell you what, this documentation is just so we have an understanding. I can give you 100 pages more of it, and it won't make a difference to you. Because if I want to do something, I'll do it, right? And at that point, I said, Fred, I'm so sorry. I apologize. I didn't know, but now I know. Whatever you put in front of me, I said, I'm going to sign, right? And he even said how, he was going to fund everything and take care of everything. And he says, I'll tell you what, Don, you get to choose how much ownership you want. But I can tell you one thing, I never give out I always get at least 51%, right? So no matter what I do, and actually I said, Fred, I'll take 25. I think that's fair. And Fred said to me, if there's ever a good reason for anything you need, I'll take care of it. I'll change it, I'll revise it, and and he did 6 or 7 times. And the document was only there as a document. It wasn't something we worked with. I didn't even kind of care about it at a certain point. And when you have that kind of relationship that is fluid, that is flexible, and that you're actually showing you're busting your ass every day. You're going to work. You're making things happen. You're proud when you know, and part of the deal is I came to Detroit 1 week every month. And it was the best week of my month because my mother lived 5 minutes away. So I had free housing, free food, free everything. And I just would sit in his boardroom for the whole week. And people would come, people would go. I was a fly on the wall, never was meant to get involved. But at the end of the day, he would say, okay, what'd you get out of this? What'd you learn? What did you see here? You know, because to me, you have no skin in this game. You can be as honorable as you have to be. And it made all the difference in the world because it continued to get better, stronger, and bigger. And my little business was never a significant thing. It was kind of funny when I got the okay from Fred. He actually told me, my CFO, my VP of finance, he had a big organization, huge. Everyone said, don't do this, Fred. It's probably the dumbest thing I've ever seen you even want to get involved in. But he says, I don't bet on numbers, I bet on people. And he says, you're a survivor and I like you and you make me better for being around you. So we're going to do this deal. And I was so grateful and appreciative for those 12 years. And it ended one day because his kids lived in Denver too, and his grandkids. And when I dropped him off, I said, Fred, I think I can take it from here. And I was a little bit wondering, am I pushing the envelope? And he said, Don, I've been waiting to hear those words for a long time. He was much older than me. And he says, I keep trying to get rid of stuff. And every time I see land, I see a building. Every time I see this, I can't help myself. Right? And he said, I'll tell you what. He said, I just want my money. No more. I'll give you 3 years, no interest to pay me back. You know, and I paid him back sooner. And he said, if you ever need something again, I'm the guy you want to talk to. And, you know, it became more like family than anything else. But I guess I proved myself. And, you know, what I did say is I feel so obligated and I feel so, I like to do something, but I know there's not much I can do. And he actually did say, he said, find somebody like yourself and do what I did for you. And he said, you'll take care of me. And he passed away just a few years ago. And he provided a foundation for Alzheimer's, the city of Detroit, and some other, and the Great Lakes. He contributed $280 million just to launch that. And it was just, he was a guy that we'd go to Argonaut Liquors actually on Colfax. His daughter lived on Vine Street right behind the Botanical Gardens. And he'd always say, listen, Don, he says, either we're going to get a baker's dozen or a senior discount. So grab me a bottle of the cheapest stuff they got to make 13, or we'll get the 15%. I'm thinking this guy, but it was a principle with him, you know, and it just was all about principle. And I think when you're with someone of high integrity, of just somebody who brings so much value, you can't help but incorporate that in you. And those are lessons you'll never get anywhere else. So I know we're top of hour. We've got a LinkedIn user here, Pride Carey. Beverly's here. Beverly, you know, is one of the very best. And I'm not just saying that because Beverly is such a professional. She's always creating custom promotions for our Tuesdays. She's always supporting everything we do. And, you know, that's really the people you want to see is who keeps showing up, who keeps doing things they don't have to do, who goes above and beyond. And I think that's a key lesson. Don't, you know, your numbers should be, you know, what they say, under promise, over deliver. If you can't make your initial numbers, change them. because that's what everybody's going to look for. Hey, in 90 days, this is going to happen. If you beat the numbers, first of all, so it didn't sandbag it. Second of all, it says that, hey, this guy's an honorable guy. Plus, it puts somebody at ease. If you're hitting your numbers for a year and two, and then something happens, it's a different consideration. And then right off the bat, surprise, surprise. And at the end of the day, we're talking about people. We're talking about feelings, emotions, greed, generosity, all, and everybody's different. The other challenge I found, and I know we got to close it up, is the people you start with may not be the people you finish with.
Yeah, that's so true. I mean, there's just everything changes, and you're working with people who are also working through their careers. They're building their own capabilities and talents. And in some ways, if you treat your people as assets, you want them to grow up and be all they can be. Along the way, you're going to get the best performance, the best productivity, and you may have future relationships that will yield you results that you couldn't begin to imagine. You can't get there if you stifle your people, you try to hold them in place and limit, the benefits that they get out of what they're doing. So it's very important to think about the big picture all the time.
Well, one caveat is, who are you dealing with, right? And what I found, sometimes the person who's providing the capital, who you have that relationship, who you trust, all of a sudden is gone, right? They went to another investment group, and now this new person shows up with a whole different philosophy, a whole different personality, and they just inherited you and your holding, right? And they may not be aligned. They may say, hey, what you're into is I'm not, I mean, whatever. So, the only way to make sure you win is continue to do what you say you're going to do, and try to do more, try to communicate more, try to get on the phone first. What you don't want someone chasing you, and how responsive you are, how reactive you are is important. And I think that's why an individual like Karl is so important, because they can move you through the minefield. They can at least identify, you're in strange territory, I'm not. Let me kind of share what we're dealing with here, so and it's easier for me not to have to explain. So Beatrice is here with a lot of emotion. Beverly, Leslie, Catherine, lovely golden girls with helping. Well, great. Well, Karl, I can't thank you enough. I learned so much every time we have this opportunity, and I think it helps expand everybody's awareness and consciousness of what the playing field is. And again, this is far more applicable to all kinds of parts of your business, not just the investor part that's so important. So last words, Karl?
No, I think that the word investor throws everybody off. You need to think of them as a person or a business that they're representing, and you want to think about relationships. And within that relationship, you want to have them be somebody who supports you whenever you need their support. And that means that you have to have a fair, equitable, and trust relationship with that person. They may move on, they may grow up, they may mature, but that's okay. That's all part of life as it goes along. But you don't want to create a situation that is negative, or where you're unfairly taking advantage of the other person. So you want that reciprocity, you want that mutual benefit to occur, a true win-win. And if you try to start the relationship with that in mind, that'll guide you well.
Sounds great. On that, we'll end it, and look forward to our next conversation with Karl. Thank you, audience. And with that said, see you tomorrow if you can. Tomorrow's going to be Kelly and Jason together, which is a new pairing. And always feel free after the show, reach out to Karl or myself if there's any questions, or if you just want to know Karl a little bit better, or even more importantly, if you know somebody who could utilize Karl's services. And I know Karl gives some open free time just to get to know people and see if Karl can help them. So really no risk just for having a conversation. So thank you all again. Can't thank you enough. So I'll do it again tomorrow, and thank you again tomorrow.